Hi everybody, I'm Dan Pilla. It's tax filing season. April 15th is coming up fast, and this is the time of year when information is flying everywhere. And friends, I don't want you to get in trouble by following bad advice. So I'm going to go through what I consider to be the top 10. There might even be more of them, but these are 10 that I could think of off the top of my head. Things that you need to know about myths, misinformation, and lies about the IRS and about tax compliance. So let's dig into them right now. Number one, a filing extension gets you more time to pay your taxes. Friends, I have been talking about this for more than 3 decades. This might be the number one biggest misunderstanding that people have when dealing with the IRS. The simple act of getting an extension of time to file your tax return does not give you more time to pay your taxes. There is a separate form to do that. All right, that's IRS Form 1127 is called an application for an extension of time to pay the taxes. And if you file that form on or before April 15th, the due date of the tax return, you can get up to 6 additional months to pay your taxes without penalties, but it's not automatic. The filing extension is automatic, but the payment extension is not. So you have to make a showing to the IRS that paying your taxes on time would cause hardship. So understand, friends, if you don't get this payment extension, the simple act of getting a filing extension will not give you more time to pay the taxes. Okay, number 2, you can claim a home office deduction if you're working at home. This is probably one of the most misunderstood things about the tax laws right now today. All right, and the reason for that is we got, as you well know, we got millions of people all across the country that aren't going into their regular job sites anymore. They're working from home, all right? They're using their computer links and they're working remotely. And these people, a lot of these people, think that they get to claim a home office deduction. Well, that's not true, friends. First of all, a home office deduction is available for small business people that use space in their home regularly and exclusively for business purposes, and the space in their home is considered their principal place of business. In that situation, a self-employed person will get a deduction for their office in their home. But employees are different. They had special rules they had to follow, and those rules were changed effective January 2018. So nobody who is an employee working at home gets a deduction for home office expenses, all right? That's considered a miscellaneous itemized deduction. It has been eliminated. You don't get the deduction. Now, on the other side of that, however, is the standard deduction has been doubled. So that's the makeup for it. You get more in the standard deduction than you would in your itemized deductions for most people, not everybody. And so it's important to understand that if you're an employee working at home, you do not get a deduction for the office space in your home. All right, number 3, and I've been hearing this for 40 years as well. If you don't get a W-2 or a 1099, that means you don't have to report the income. And I hear this all the time, that people think that just because the payment they received was not reported to the IRS, that somehow it's not taxable income, and that is simply not true. You have an affirmative duty as a taxpayer to report all of your income on your tax return that you earned, regardless of whether that income was reported by a third party. All right, so if you've got a side gig going on and you're making money through a small business and it's cash money, you still have an obligation to report that on your tax return. If you're working for third parties as an independent contractor and they pay you $400, $500, $600, but they don't send in a 1099, that does not mean it's tax-free income. It's still income. You still have to report it on your tax return, and you still have to pay taxes on it. So don't fall into that trap, friends, of thinking that just because you didn't get an information return, a W-2 or a 1099, that it's tax-exempt income. It is not. You still have to report it. All right, number 4. We hear this all the time. Filing a tax return is voluntary. Friends, this is probably the single biggest lie that is out there circulating about the Internal Revenue Service. Now remember, I've been in the business of tax litigation for more than 40 years. I got into this business as a result of problems my father had with the IRS. He had a small business in our hometown of St. Paul, Minnesota, got behind on his employees' withholding taxes. The IRS ended up shutting down his business and auctioning the equipment off for a couple cents on the dollar. And then things went from bad to worse for my dad because he got involved in the tax protester movement. And these are the people that say filing returns are voluntary, the tax laws are unconstitutional, the tax laws only apply to aliens and not U.S. citizens, and that the Internal Revenue Service is not a part of the federal government. I mean, on and on and on these arguments go, but the core of the idea is that filing a tax return is voluntary. Friends, this is false, false, false. You need to stay away from these arguments. You need to protect yourself from this stuff, because all it does is get people in trouble. Now, let me tell you something. On my website, TaxHelpOnline.com, I have a free special report on the website called the Untaxed Promise. And in that special report, I break down all of these various arguments and show you how they are false so that you don't get in trouble following this nonsense. So I'm warning you, please stay away from this stuff. All it does is get people in trouble. All right, number 5 on my list is the idea that you don't have to pay taxes on cryptocurrency. Friends, this is not true. One of the biggest bits of misinformation flying around out there these days is that trades in cryptocurrency is not taxable. And this is especially important in light of all of the activity and frenzy that's going on around Bitcoin. All right, the IRS treats Bitcoin trades or any other cryptocurrency trades just like any other capital asset. All right, what that means is that if you buy it at one price and sell it at a higher price, the difference between the buy and the sell is considered capital gain and you're taxed on it. So for example, if you bought Bitcoin at $10,000 a coin and now you're selling it out at $50,000 a coin, that's a $40,000 profit, and the IRS considers that profit to be capital gain and it is taxable. All right, so understand that Bitcoin and any other cryptocurrency is taxed just like any other capital investment, just like stocks, just like anything else that you buy. If you buy it at one price and sell it at another, the difference is either gain or loss. If you've got a gain, it's taxable. If you've got a loss, it may be deductible. But cryptocurrency, Bitcoin, all of these cryptocurrency type investments are absolutely taxable on the gain part of it. Make no mistake about that. Thanks for watching, and don't forget to go to my website, TaxHelpOnline.com, and in the comments below, I want you to share with us the worst myth, the craziest bit of advice, the worst bit of information you've ever heard about IRS and tax law compliance, and let's share that so people understand how to stay out of trouble with the IRS.